Hi everybody, welcome to the first video analysis. I'll probably be doing more of these just because a picture is worth 1,000 words. Um, it's hard to explain some things in writing, so might as well show it, right? So this pair we're going to look at today is the AUDJPY, Australian dollar, Japanese yen. We're on the daily chart. So just taking a look at this from a high level, you can see price was on a downtrend, right? And then we're looking for a clear breaking structure and a way to enter the market, right? So if we look over here, price made, like, let me just mark it up. So, it made a lower high, a lower low, a lower high, and then price failed to make another lower low. It has to close below this lower low for it to make another lower high and then continue the trend. So it didn't do that. What we see instead is it broke structure to the upside, right? So this right here is our warning sign that we talk about in the boot camp. So this is the warning sign. Actually, sorry. That's our break-in structure over there. This right here, this point right here, where my mouse is the warning sign, right? We don't enter short yet or long. We don't enter at all. We see what price is going to do. Is it going to break below this low, or is it going to break above this lower high to the upside? So what it does, as we see in now, is it broke to the upside. So now we're bullish on the daily time frame. So now we can consider this to be a higher low, a higher high, higher low, higher high. So now what we're looking for is that next higher low leg to form, only for it to go up again, right? That's what we're looking for. But before we get there, we have to do our analysis top down. So this is the daily. Okay, so what we do is we draw our Fibonacci tool. As you can see, we're looking for price to enter this zone right here for a nice discount in order to enter up, right? So that's what we're looking for. So we're looking for price to come into this zone, and then we're looking for price to exit this zone, right? We can target the first high over there, or, we always usually target the first one, the high that it made, then the 27% and the 61%. So let's go down to the 4-hour. Let's see what's going on. So this was that break of structure on the daily chart. On the 4-hour, you notice that you have this structure going on. So what happens here is you have a lower low, okay? Then you have a higher high, you have a higher low, and then price fails to make a higher high. So what we should have seen is price make this leg first, like basically what you see here, but it doesn't. It breaks to the downside. So this is actually our warning sign over here, and this is our confirmation. So if I was here, let's just say, let me just do a replay. If I was at this point in time, I would look to short this market. Okay. I would look to short this market because the structure was broken. So what you have is you have the high point right here, lower low, lower high, lower low. I'm looking for a lower high. But what happens here, if you notice, it just blasts right through the Fibonacci zone. So if this was our fib, let me just draw our fib real quick. Sorry. So if this was our Fibonacci zone, price just breaks right through it. So when it does that, then it's no longer considered a valid zone. So now we wait for another valid setup. So let me just get rid of these. Actually, I can keep those. So what we can do now is wait to see what price is going to do. Then price makes a higher high. So what happens now is price once again breaks structure, okay, on the 4-hour this time. So it broke structure on the daily. We're looking for that structure within the structure, right? It breaks it to the upside on the 4-hour. So now what we're looking for is price to come into this zone, find support, and then make its way up to the target levels that we have identified. So what we do now is we wait for price to come into this area. If you recall the 6 confluences that we spoke about, we're looking for all of those confluences to appear. So let's draw our psych support levels. There's one right here, 89.50. And there's another psych support level just about here. And this one is 90 on the dot. So that's a key level. So I will redraw my zone to be something like this. So I'm looking for a clear rejection in this area right here. Okay. So if I place my entry over here and my targets, well, my first target over here, 1 to 5 trade. Okay. And then you're looking ultimately for a 1 to 10 trade, essentially. Okay. Just a couple of things to note. Like, guys, look at this price. You just have to open your eyes, right? Look at this pump. This has been pumping for days, right? Like this, how many hours is that? Let me just check. So this up to this point right here, 5 days straight, AUD has been pumping. So some sort of retracement is in order. Okay, we can expect a retracement at this point into this region right here. And then we expect from this region to make its way up to the next leg up. Okay, so that's the analysis for AJ. So we just have to keep an eye out for this region right here. Look for our 6 confluences that we discussed. And then as you can see, there's some key events looking to happen in the next couple of days. So we can keep an eye on this week. If not next week, we should see price enter this region. That's all for now. Hope you found this useful. Thank you for joining, and so you'll see you next time.